Good evening, ladies and gentlemen. Welcome back to Walk the Block. We are navigating digital finance all together here. We got a great show here lined up for you tonight. We're going to be talking about what's going on with the markets, bit of a pivotal moment for the overall markets and some breakouts, yes. But also, we do finally have some updates on the Clarity Act. It finally did something instead of just people swearing that it's going through. It actually got past the first Senate Banking Committee. After this, it's going to the floor. We're going to be talking about what made it in, what didn't, who to watch out for, all that stuff. Additionally, headline of the evening. Yes, 2026 has a new record setter for the largest hack for crypto of the year. So we're going to be covering that one, talking about all the classic security stuff. And then beyond that, we also have a little tidbit about Goldman Sachs is rotating some crypto. So seems like they might be down on XRP and Solana and looking towards Hyperliquid as the new play for them. Alrighty, that is what we're talking about here tonight. My name is Zenith. I am your host for the evening as usual, and I'm joined by my excellent co-host and good buddy over here, Tracker. How you doing?
Doing good, man. Let me get back into it. I was upset about having to miss last week, so looking forward to getting back on track this week.
Oh, you can
and
that one on me.
Well, I know we're back here, because I know we typically are on Thursdays, but we obviously want to move it to today so we can make it happen. So glad to be able to do it. So we'll dive into this and let's get into some of the stuff because here's the thing, man. Crypto, even though the price action has been just tough to deal with, while you see everything else seem to be ripping, it's not lacking stories. It's not lacking, a lot of stuff that's going on. There's still a lot of things happening. It's just, when price isn't moving, it just feels stagnant, man. It's tough, and I get it.
Yeah, I mean, price goes down, everyone cries that it's all over, it's going to zero, and then when it does nothing afterwards, which it usually does, by the way, people are out and they don't care. And then only when we get price go up do people jump back in. So yeah, price action, boring time. Crypto news, not boring time, actually. So looking forward to that one. Okay, well, with that being said, let's get into it tonight. We're going to be starting off with the big one of them all. You know it, you love it. It's Bitcoin. Okay, currently sitting just a hair under $78,000, coming up a little bit after we had a recent low of about $76,000. Last time we talked, I'm pretty sure we were back over here looking at this 200-day moving average. That's my red line coming down from the top there. Our yellow is our 20-day moving average, and the orange is our 50-day moving average. This chart looks really good for people trying to explain to folks why the moving averages matter and how they psychologically affect the market. Because if you see, we basically tried to retest this 200-day moving average once, twice, thrice before we went all the way back down and basically very, very close got down to our 50-day moving average after we had a little bit of stopping of the movement at the 20-day moving average. So it's just a great example. The last 2 weeks actually showing how these levels affect the prices, affect what's going on. And realistically, it's just kind of affecting people psychologically because the price of Bitcoin doesn't move a whole lot on its own. It's always human input that's required for it. It's just funny how all this stuff lines up. But yeah, overall, we're looking at a bit of a cooling off period from what appeared to be a pretty good little rally, going all the way from 65,000 all the way up to 82,000. So pretty good little bump there. Small decline down to 76, but we're in a period where I think we could be looking at the close of a cycle here coming soon. What I'm talking about are the 60-day Bitcoin cycles, which is that typically it operates on 60-day cycles where you're going to have a low to a low, and there's going to be a high somewhere in between. And based on where it's at, you can determine kind of the overall cycle length. But again, it's all range of probability stuff. It's not a hard science exactly. Right now, we're currently sitting on day 53 of the cycle. Our possible low, I'm not saying it's guaranteed, but a possible low came in on day 50, 51 there, depending on how you count it. Overall, does this look like normal cycle things? I would argue yes. The big question for me is where is going to be the cycle end? Our cycle high was on day 38, which is a little bit past the midpoint, implying that we're more than likely going to have a cycle longer than 60 days. If that's the case, then that means that your cycle low is either going to have to come back below the 76,000 level, or it's going to have to find another more dramatic point before it very clearly starts going in the upwards direction, if it's going that way at all. Right now, currently, I'm looking at some support levels. 76,000 appears to be a decent little one here because we got confluence here, a little bit of confluence prior, and then also our big peak from the 18th of March. That's what I'm really looking at. And if you go even further back, on the way down, we did stop off the 76,000 level as well. So overall, this could be a setup for going towards the upside. We could also just get another week of chop, maybe a few days of down before we find that cycle low. But overall, like this is what we talked about in the opening, which is that is the price action doing a ton? The answer is not really, because overall, going from like 65 to 82, that's like roughly a 33-ish% gain. But compared to what we see with previous like runs and stuff, it can basically double, if not do more than that. So in a time where people have been exasperated by this part over here, that whole down part, yeah, people might be out of the game, not paying attention. So this doesn't look too interesting in comparison. But for a time where people are still having the great debate between four-year cycle theory or the macroeconomic principles idea, this could be one of those points where we actually see four-year cycle actually start to lose out a little bit and a shift towards more broad fundamental principles, talking about like global liquidity cycles, the M2 money supply, overall market conditions, and how they affect investors viewing risk on and risk off assets. So right now, if you told me Bitcoin would have been doing this sort of action on our way down, I probably wouldn't have believed you. But at the same time, it has, and it's a very welcome sight. Overall, Tracker, based on what I'm laying out here and what you're seeing, how do you feel about the direction we're going to be going in the short term?
Well, let me add before I answer that. So if you take the high Fibonacci levels from the high on January 14th to the low that occurred on February 6th, and you'll also see that we hit resistance right around the 618 level, right around the 618 level. We basically hit some resistance there from the top. And so to me, you had a lot of reason, and with the 200-day moving average, you had a lot of things setting up for a pullback a little bit, just on some resistance, because we don't typically just bounce and go straight back up. Yes, I get it, you can get that, but the thing that's better about this, even though it's not as interesting, because we like to see those rips, right? Everybody wants to see those rips, but this is more sustainable, meaning this is putting in a lot of work here to digest a lot of sellers and work people out. If you flip this over and do your volume, your fixed volume indicator on here, and you'll see where a lot of people are piled in at. You could even zoom out even more. What I can tell you now, and I was looking at this more we'll talk about ETH here in a minute, but if you look at the I think it's like volume. If you type in the volume,
fixed volume.
Oh, just type in volume. Just get rid of fixed and put in volume. Like remove fixed. Yeah, there you go. Let me see here. Scroll down. It's going to be volume. Yeah, I believe it's that. I'm looking for the one where it shows us the actual volume per the level. Let me see here. I have it right here, man. But what I like about it is it's the here. What I like about it is, it's the volume profile visible range. So volume profile visible range. What I like about it is you can zoom out and it's going to show you where most of your volume has been put in at, and you're going to see a substantial amount has been put in. Let me see if you've got it.
Volume profile.
Visible range. There you go.
Ah, this guy. Okay.
Yeah. So, and you can zoom out even more to see how much is there. But the reason why I like it is it's showing you where a lot of people have been building up positions at. So what I like is there's a lot of volume right there. So that's a good point of control right here, right where we're currently, no, we're above it, but right around that for Bitcoin specifically, that's 60,000 up to like $70,000 range. There's a lot of volume been put in there at that level is where I'm getting at. See, you can see that massive amount of volume right there. That I don't know what you're doing on that piece, but that the blue and the yellow is where you're seeing a lot of things. And if you'll notice, we're starting to hit a little bit of resistance. Like there's not a whole, it can gap up pretty well. And you'll see it when we flip over to Ethereum, you'll see even more on it. But I just wanted to bring up, you have the fib levels, you got, you had a nice run, you're running into some resistance. And I think we even pointed this out, at least inside of our channel for the members. We were telling them, basically we're probably going to see a little bit of resistance here, and we are hitting some of that resistance. So this is perfectly normal. Same thing with Ethereum. We were saying you're going to run into probably some resistance here. So that's just what's happening. And the overall markets, I know they had pulled back slightly because they've been on a tear, but I just look at it like there's a lot of good digestion going on right here. And keep in mind, most of the influencers and most people in crypto are they're betting to the downside. So this could be that melt up that you're starting to get, where a lot of people are short. So people are going to start getting liquidated if they're short, and because there's more pain to the upside for more people if they're short this market, because everyone's hooked on this idea that that 50 or 40,000 or 50,000 in Bitcoin, which I just don't, I don't know what would have, you would have to have something dramatic, something like, the Clarity Act stating that it's not going to get passed. It's not going to happen. That could certainly push us back down potentially. I'm not saying it will, but I think there's still more room to the upside, and we could hit some more resistance. But I think you're going through a digestion period. Like, I think you're seeing it, come to fruition. I mean, we've gone sideways for quite some time. Typically, when we go sideways for quite a period of time, we tend to, start to change. You start to turn the momentum to the other direction the longer you keep going sideways like this. So I'm looking at that. That's what I'm looking at. So having some resistance to the fib levels, looking at the 200-day moving average, the bounce off this, and what I'm seeing is higher lows and higher highs. That's what I'm seeing. And people will be like, "Well, that's just a consolidation, bear flag till we drop more." Well, yeah, but this has been going on for quite some time. And once again, if you looked at those volumes, you're going to see a ton of volume there. So there's a lot of support there at the Bitcoin levels, say around that 65 to even, we'll say $70,000 range. It's a lot of support.
That's true. And we can get into the technicals all day, but the bottom line of what's going on here is kind of what you brought up just a second ago, which is, where do we think that there's more risk, to the upside or the downside? What we mean is basically price go up or price go down. And if that happens, what's the pros and cons of each? Well, obviously price go down. If you buy at this level, you're losing money until it goes back up again at some point. But at the same time, if price just keeps going up and kind of gets away from you, it's kind of the idea that you missed the boat. Like, it's sailing away, and it's going. You can watch it, and you got your ticket in hand, but you're not on it. So that's the big one there. As far as
there's a psychological problem there that happens. So everybody who's been sitting on the sidelines waiting for this thing to get down to more closer to their price targets, if it never happens, or when will they finally say, okay, I've had enough, I'm ready to get back in, I got it wrong? And typically that's where you get this melt up, where price keeps going, and then people start to pile in and say, okay, fine, I'm not going to maybe go all in, but I'm going to add some. And then of course everybody else says the same thing. That's where you get this slow melt up, where people are just willing to start to get some more exposure if they're on the sidelines 100%. This is why we always say, I personally think you always want to have some exposure, because you never know what's going to happen. But at the same time, you always still want some dry powder in case it does go down. You're positioned either way. And the higher it goes up, the more dry powder you should be building. As the more it goes down, the more dry powder you should be deploying, because it's just no different than being at a clearance sale. And prices have gotten very attractive. I think people who are just holding strong, saying like, I am not going to buy until it gets down to 40 or 50. You're playing a dangerous game, and I keep beating that drum. If it works out for you,
level is very interesting that you mentioned that, because I found some stuff as well that kind of also validates that there could be more downside to the
everybody's thinking that. Yeah, everyone's thinking that, man. Everybody's thinking that we're going to get another drop, and we could. But I think I'm just saying, if you're waiting to try to deploy everything in one shot, your dry powder, and I think that's a dangerous game. Like, there's a risk, there's risk management. Risk management also is risk management to the upside too, not just to the downside. So
sure,
you don't have to get it all right, is what I'm trying to say. You got to be able to, be positioned. So regardless of what happens, you're positioned to take action, and you can still have some some money in the game on the plays, as well as have dry powder to deploy. So I'm still thinking we're going to probably be melting up. Now, I also stated, like, if you wanted to flip over to the Ethereum, or are you done with Bitcoin? Because I wanted to look at Ethereum too.
Yeah, we're done with Bitcoin. Let's get the old man out of here.
So Ethereum was interesting because if you looked at the ETH BTC ratio, and you don't have to, but it's been going down. We've been breaking down more. So it's just ETH is just more and more out of love, which is to me crazy because it's going to benefit so much more with the Clarity Act, which we just got through that hurdle. We got through one big hurdle, which is the Banking Senate Committee. So we got through there. Now we're going to talk about the other hurdles. But to me, there's so much more room for Ethereum to run, because right now, if you choke off Ethereum, you choke off all the altcoins. Like, if Ethereum does not go up, you basically suppress everything in the markets. And that, there could be some truth behind that, because I mean, Ethereum is the one that's going to benefit the most here. I get it. Solana, some other ones will probably benefit as well, but Ethereum's still the big one on the block when it comes to real world assets. But if you notice on Ethereum, right now in this pullback here, I personally deployed something. I tried some dry powder just on this recent pullback just yesterday, just because I saw this support line level. We're in this like uptrend with higher lows and higher highs with Ethereum, but I'm still suspecting if it does want to pull back down to 2000, that just under the psychological 2000 to 1900, there's a good point of control there, a lot of support there at that level too. And look at the Ethereum price. If we do break out of that current highs right around that, we'll say 2450 line level, then it's a pretty good jump straight up to 2800, because there's a big gap there where it just fell. Like, there was no time for anything happening. So if we break out to that, you could see it, crank right up to 2800. And hopefully what you would want to see is it get up to 2800 and kind of start building a solid support at that level there, because that's where, like I said, more volume took place there. So you have a huge gap to fill if it does do that. So
That's true. Yeah, because it's very bare in that range, especially just looking at for our recent time levels though. As we zoom out though, we do get a little bit more filling back in there, but at this point, we're talking like almost over a year ago. So price memory is a real thing, but at the same time, all the recent stuff, it was either between like 2750 and 3500, or between 1800 and 2450. So, like you said, not a whole lot of resistance to get through up here, and if it does actually break above that, it can get going up for sure. Yeah. By the way, we have an excellent comment I do want to cover here. Mr. Rick C. Does. Good to see you, sir. Excellent profile picture, by the way. That's fantastic. That's Jerome Powell standing in front of the market bubbles, effectively, of everything is red. I love that. Is this not a relief rally? You could be entirely correct, because that is one of the things that does happen from time to time, is that either a relief rally or a dead cat bounce. You could say that we had a very similar thing go on back in late 2025, early 2026, when we did drop down to 80K, got all the way just a hair close to 100K before ultimately dropping down to 60. So could it be a relief rally? Yeah, it is a possibility. But at this point, based on a lot of the other stuff that I'm looking at, it's why I brought up this guy actually. Coming to us from, who is this? Crypto Rover. Bitcoin probably bottoms between the 200 and 300 week moving average, like it does every single bear market. Okay, interesting notion here. Let's see what he's talking about. Well, currently the averages are sitting above 51K and 61.5K. Okay, if that's the case, this is a relief rally and we do go towards the downside. Where do we stop? I think that this is actually a decent answer for where you stop, or a line where if you get below, you know that it really is the bottom. And the longer, the more amount of time that we spend at this level, or even a higher level, these averages are only going to move up, because obviously, as the chart shows, the averages are well below what the chart has been doing for basically the last decade here. So at worst, we're looking at going from current level to possibly like 50,000. I don't think it's entirely crazy to say that right now, people saying that $40,000 Bitcoin is in the cards, I think that ship might have sailed. I think we're at a point where realistically getting anywhere under 50 is looking at like bear market low. And I'm getting more and more conviction for this position as we go further on, because the longer price stays up, the more these averages stay high, along with the cost of just mining Bitcoin as well. And those are two very big barriers that if you cross below it, you know that price has seriously gone down. And odds are it's probably not going to stay there for too long. So those are just a couple of the big things I'm looking at. Relief rally, yeah, it's possible. But at the same time, the question is, if it is a relief rally, how much further down does it go? I'm not saying that going from 78 down to 50 wouldn't hurt, because for anyone that's still holding in the market, it absolutely would. But at the same time, it's only if you don't sell. Because guess what? If it does go down that low, odds are, based on the entire history of crypto, Bitcoin especially, the number one, the biggest, the largest, the leader, odds are it's getting back to a new all-time high at some point in the next 4 years. And it's not crazy to say.
I'm in the camp that yes, it absolutely could be a relief bet, but that's what all the shorts and all the people and all the KOLs are all betting on. That's what they're all betting on, that this is a bounce. I'm still a believer in the camp, and we've talked about this going back to last year. What brings the most max pain? Well, the max pain that brought for a lot of people was when what triggered October, and then we just started selling off. So people got out that point on the 4 year, you're doing great. What else would cause a lot of pain? Well, people now they're on the sidelines and have been waiting for that $40,000 or $50,000 range, and it never comes. That's going to bring max pain. And all these history and all this stuff we look at, that's great and all. TradFi wasn't around during all those times, though. TradFi is here. Manipulation is heavily into this market. You can look at the Ethereum price and clearly see that thing's been manipulated massively. And not just that, Bitcoin, tons of other altcoins have been manipulated, but I know a lot of them are tied to Ethereum. The manipulation is real, and it's not hard for TradFi to manipulate these small markets. Crypto is such a tiny market cap. We keep pounding that drum. Personally, TradFi is going to let this run when they want it to run, and I think all of this is going to hinder around more and more is the Clarity Act. If the Clarity Act gets passed, crypto's taking off, and it's going to catch a lot of people on the sidelines. If it doesn't get passed, the question is how low will it go, or will it just keep chopping sideways? Like I said, I still think there's more risk to the upside than going down, especially after we've already dropped as much as we had. I mean, like, how much more there's a point where if you're on the sidelines, 100% on the sidelines, there's a point where you get so greedy where you're trying to pick that perfect timing, and typically it doesn't work out for you. And I think if more and more people are trying to do that, which it certainly feels that way, a lot of people feel like they're trying to time this thing to enter back in because they're looking at 4-year cycle, this and that. And I'm sorry, TradFi has jacked it all up like they jack everything else up when it comes to any type of trends and analysis. So I'm sorry, I think you're going to see max pain across the board. Bears and bulls are going to get max pain. Obviously, the bulls got max pain to the downside, right? And now the bulls and the bears on the sideline waiting to try to enter in at more realistic prices. I think they're going to be feeling some pain as well. That's my 2 cents. And I'll still stick to that thesis until it happens, because if I'm TradFi, or if I'm, if the big whales, smart money, why would they want anybody else to get back in now? Now they've got it to where they can control the price and through the ETFs, and they can basically just keep manipulating the prices. Same thing with central exchanges. And let's be really clear here. I guarantee there's back end deals going on between central exchanges and the banks. And with this whole Clarity Act, there's probably a lot of deals going on and a lot of things that are happening. So the smart money has already been taking stranglehold of a lot of this stuff. And really, we're hostage to them now. We are all hostage to TradFi. That's the reality everybody needs to understand. So you got to think more. I guess you have to be more sinister in the sense that what would be the most painful for everybody on both sides.
Yeah, I hear you. I mean, this might be a decent little transition here, but you brought up a scenario though, which is that, okay, what if Clarity Act doesn't get signed? What happens to the market then? I think the case for the market kind of just takes a small dip and then just goes sideways for a while. Because at that point, I think psychologically people are just like, okay, cool. It's no different than it was being treated in the past. No big breakouts or anything. People just lose even more interest if there was any more interest to lose at this point. So that could be a very real possibility. And if that's the case, then it's like, okay, well, it's the question that you keep asking, which is like, is there anyone left still to sell? Who's left to sell? And the answer is the people that are never selling, or people that got in that might not have the same convictions that our boy Michael Saylor does. So talking about TradFi there. And honestly, I think that they're in this game for the long term. They would not have pulled the trigger on opening up all the ETFs, taking the massive positions, trying to corner supplies of the market unless they had a long-term vision. I There are people that could have been doing like short-term and medium-term like swing trades to try to make money, maybe even through the options market as we saw with Ethereum in the past and stuff like that. But at the grand scale, I think that I don't think TradFi is going anywhere.
Well, no, and then not just to add to that. So as the TradFi and investors, where are you trying to put your money now? The major markets have already rallied hard. The AI and quantum computing and all of that, you're seeing the melt up going on currently with that right now. It ain't going to be gold and silver. Shoot, that stuff doesn't move once every 50, 45 years, and it's already had its move. So they dumped on retail. So where are they going to rotate the money, all their gains they've got? Where's the next opportunity? So for them, I mean, crypto's over here, it's been lagging dramatically. I was researching this hard because I'm always looking, okay, what are all the possible investments out there outside of stocks, crypto, real estate, everything? What's out there? What are possibilities? And it keeps coming back. Crypto still has the biggest ROI. It's got a lot of risk, obviously, and most volatile. But if you want to get the most amount of max gains, it's going to be in crypto. Well, what would trigger it? Well, if this clarity thing could get freaking passed, and it seems like the banks and the central exchanges have come to an agreement on the yield, which was the big holdup. Now, I know we'll talk about this here in a minute, but all these institutions, all these major players, all the big, the big three and all, they're all investing in real world assets and they're tokenizing. They're going to tokenize there. Everything's getting tokenized. I mean, we're going in this direction. Like you said, how much money's already been spent on this development, moving in this direction?
It's a lot.
I mean, if you take, the infrastructures of what they're trying to go to, and for speed and automation and cutting overhead costs for companies and stuff, tokenizing definitely solves a lot of those problems. And they're starting to realize that. So does that translate into us really going up? I think Metcalfe law will definitely support that theory, that's what you should see. But there's a lot of things here that should have been able to happen. But I still go back. I think TradFi is still suppressing Ethereum and Bitcoin for that matter, because it's been there's no reason for it to take off yet. And I think that's where we are. But is there any reason why to dump it lower? Why would they TradFi? Okay, I'm just thinking here. If the players out there wanted to shake everybody out, they're already shaking a lot of people out because of the 4-year cycle, theory, and you've already shaken out everybody. Do you really want more people crowding into your trade? And no, that's not the way they think. They want to keep buying the bags and they want to get it into this range where they can keep adding, which they've all been adding. Hasn't been hardly anybody dumping from the big institutions. And if they let it get down to that attractive 50,000, 40,000, they know everyone's going to be jumping in at that point. Why would they do that? I don't know. Like I said, think more sinister, and I think you can kind of figure out and be more contrarian, because unfortunately that's how I think we've all had to start thinking, because TradFi isn't here now. And like, put yourself in their shoes. What would they want to do if they can control it? And you might be thinking, oh, they can't control the whole market. The market cap is nothing in the grand. The whole crypto market is less than silver. What is it? Half of what silver is? A third of what silver market cap is. So they can easily manipulate crypto. This is nothing to them. This is a very small thing with the ETFs that's allowed them to do it. So I'll still keep pounding that drum. Could it be could we go to, we absolutely could. There could be, and keep in mind, it could always be a black swan event. So if some major black swan event happens and all the markets dump, oh yeah, crypto's dumping hard with it too, trust me. But if you see a big swan event like that, you better believe it's going to get bought up extremely fast. Very, very fast. It's going to be one of those, like, the quicker it goes down, the faster it's going to rip right back up. So
yeah, we've seen that.
Better have your hand on the trigger.
We've seen that in both of the major like bearish events over the last 6 months, especially when it got down to that 60K level. The volume candle on that one was absolutely massive. So people saw that and they acted. Either that or they had a lot of limit orders set, and we're very happy about the moonshot limit orders hitting. So yeah, you're not wrong. Alrighty, tell you what, let's get into it. We teased it. We've been getting teased about this for 4 full months at this point. Finally, The Clarity Act, it's doing something for real this time. It has made it out of the Senate Banking Committee. So, what does that mean? Well, if you remember last summer, the House passed the Clarity Act along with the Genius Act. The Genius Act actually made it all the way through the Senate to the desk of the president, where it was signed into law. This one got stuck in the Senate for a long time. We were supposed to have markups in January. Markups is where they make small amendments to the bill as they see fit because they are the lawmakers. We were supposed to get that markup happening in January. Did not happen, but we did get it this time. And it actually made it through the Senate committee there. I believe the votes for this one were 15-9, a bipartisan vote. And what I mean by that is all 13 Republicans voted yes, and 2 of the Democrats joined in and signed yes as well. But really, if you want a great breakdown of this one, we have 2 links to share with you guys. Number one, I found this article from galaxy.com. They do a great job of breaking down pretty much overview of the bill, background, next steps, but also it talks about a structural comparison, pretty much going through the language and showing you which ones actually got changed, what changed in each of the different titles. But the most important section that really this comes down to is this guy right here. And that is stablecoin yield. This realistically was the major crux of the entire fight going on to this point. So we finally do have a little bit of language about what got changed between the draft that we saw in January, or we were told about in January, versus the bill that actually was released here in May. So Section 404, stablecoin yield compromise. The January's draft framing was permissive, preserving rewards, and May's draft is prohibitive, prohibiting interest and yield. The substantive change is more nuanced than the title swap suggests, but it is meaningful. January draft prohibited interest or yield paid solely in connection with holding of a payment stablecoin, while preserving broad activity-based rewards covering wallet use, account use, platform participation, pretty much the activity stuff. The May draft adds a second prohibition prong, payments, quote, on a payment stablecoin balance in a manner that is economically or functionally equivalent to the payment of interest or yield on an interest-bearing bank deposit. That really is just the best synopsis of what we've been fighting over for the last 4 months. It literally is people saying that the stablecoin balance payments looks too close to an interest-bearing bank deposit, and the banks did not like that. So that was removed, and instead what we have is that there's a carve-out for bona fide activities or transactions that are not economically or functionally equivalent to the payment of interest or yield on an interest-bearing bank deposit. If we translate that into a little more English, pretty much what it says is it may be calculated by a reference to a balance, duration, tenure, or any combination of the foregoing. This is a meaningful concession to the crypto industry. It means rewards calculated as a function of balance or holding duration are not per se prohibited as long as the underlying activity is bona fide and the arrangement is not economically equivalent to a bank deposit that bears yield. So that realistically is the headline news right there for you. Again, we're going to be posting this one. There's also a fantastic video from Coinbase. We're going to give you the cliff notes on that one a little bit. But yep, galaxy.com. Shout out to everybody in the Telegram. This is exactly where that's going. But also the video from Coin Bureau does a fantastic job, and it's about 10 minutes long. Definitely give it a recommended read there. Overall, though, look, I'm happy that we got some movement on this one, but the great irony is that the betting markets were not happy on this one because the probability went down for this being passed in the year. Explain that one.
Well, I think it was because a couple of the bipartisans that actually voted in the clarity, to get it out of the Senate Banking Committee, even though it said we're going to vote here, does not mean necessarily they're going to be voting in favor for it when it goes to the floor. So I think that's probably what shook it up. There are some key people you want to watch out for though on this. The big date is this. July 4th is what they're targeting for this. If this does not get through by July 4th, you're going to see those probability markets really tank because you have the mid-year elections coming up right around the corner, and they feel like if they don't have this done by July 4th, then the chances of them getting this done before all that, it's going to be slim to none. Plus they take a break, all these problems start to become major. It just drops dramatically. So July 4th is when we want to see this get through. There are some key players that you want to watch. Senator Cynthia Loomis. She's a Republican out of Wisconsin, I believe, or
Famously
Wyoming.
known as Crypto Mom.
Yeah. She's pushing hard for the passage. One of the swing votes, Mark Warner out of Virginia, Democrat, is also engaged in the Democrat. You want to see you want to start seeing him talk pro crypto. Like these are some of the people you want to start seeing. And there's other ones on this list that you go through it. Those are the people you really want to pay close attention to. And the other thing is that they start to stall, saying like, hey, we were gonna start talking about it, but I think we're gonna push it back. Anything like that, anything pushbacks or anything like that, the probability markets are not gonna like it. So that's what we need to see. So I'm expecting, if the administration really wants to get this through, when I say administration, mainly Trump's been the one that's been the biggest push for this. Um, not just him. I obviously there's the ethics issue with him and his whole family. Having crypto, because they're going to benefit directly.
We'll
So
hit that
they're
in a second.
yes, yeah. There's a little conflict of interest, but I know you're gonna. We were talking about that in the green room, but But that aside, like we just stated, there's been a lot of money, a lot of people working to get this thing pushed through, and a lot of companies have positioned themselves, mainly Wall Street, and big institutions have been building in this. So they obviously want this to go through. The fact that the banks now have come to an agreement what they're willing to allow for yield or rewards, so that it doesn't necessarily conflict with their products, because that was the bank's biggest concern. If you provide yield on stable coins, then their products become non-existent. And they were saying like trillions of dollars would leave the banking industry. And I'll be a little smart here, but I think they would have a tough time finding that money, because I think they've over leveraged all that money. So if you had a huge exodus of money on the bank, people pulling out a lot of massive amount of money out of the banks and trying to go straight to stable coins and try to earn 5% yield, there's no bank products that are going to be able to compete with that. That was the big threat. So now that threat's out of the picture because they've come to that agreement. So I just think that they're going to try to hopefully they're going to get this done, wrap this thing up and get it done so that we can all move forward. Because if they can get this through and get it done quickly, then you're going to see a lot more pickups. You're going to see innovation start to explode and rip really quick. Things are going to move very fast because everyone's been waiting for this to happen. And the other thing that they've been talking about is, if they're going to keep sitting there wasting their time on this, there's other countries around the world that'll be more than happy to jump all over this and benefit from it. So the United States is playing a tricky slope here. Whether they like it or not, they better get on board, or there's going to be other countries that are going to move quickly with it, and money's going to flock to those areas. And that's pretty much what will end up happening. Innovation as well. So all these things are threats.
You're entirely correct. The timing is very important on this one. We've been working on this since Trump got into office. There was crypto summer of 2025, and I think a good bit of the push to get it done may have died when the Bitcoin price took a dump. But at the same time, they're still getting it done, and it's very important fundamental stuff. I know it's a little nerdy and in the weeds for me, but one of my favorite things about this bill, as it stands, is that it gives clear, definitive guidelines to the SEC and the CFTC about who controls and regulates what. Because up until this point, it has only been the SEC claiming that all crypto is a security, and now we're finally getting specific legislation saying, nope, it's not. And each of you gets a very specific thing. And guess what? The CFTC, as long as it's not a security, they're going to get the majority of the control. So that's what I'm stoked about. But I guess there's a few other shout outs. Tim Scott, Senator, he is actually the primary Senate driver of this one. And then Tom Tillis. And where did he go? Angela Alsobrooks. Those are the two key negotiators that came up with what is now being called the Tillis-Alsobrooks negotiation. That's pretty much, if you see any reference to that, that is what they're talking about, the difference in language between the January version and the May version that we're looking at here. So those are the key folks there. And then, of course, we also had Senator Elizabeth Warren coming out and saying that this is not only a danger to the banking system, this is a danger to the entire economy. Hear me out. No. And I say that because this realistically has always just been a fight between crypto and the banks. At the end of the day, this does not affect the overall economy. If it does, it's actually just probably good for the US because it increases our stock in the crypto business space that we've been trying to build in for so long. We finally have an administration that's friendly to it, and we're finally getting legislation that's solidifying our place in the world stage, like you mentioned previously. So
It's more competition to the banking cabal. Let's just call it what it is. I mean, it's more competition. When is more competition for consumers a bad thing? It's when you have everything centralized is when it's a bad thing. You give more choices for investors and people to decide what they want to put the money to. I mean, the banks don't like it because now they have somebody on the block that's threatening their empires essentially, and that's what it's coming down. Elizabeth Warner's back. She's been backed heavily by the banks. I mean, that's who's got her in power. I mean, not just her, but a lot of people. And don't get me wrong. I mean, all these senators and everybody in power they answer to somebody or multiple people, and she answers to the banks. That's what she's always pushing for the banks. She's always in favor for whatever's best for the banks. So I'm not surprised by her saying that. I mean,
yeah. Tell you what, though, I guess we'll hit it now. So, did this make it through the Senate? Yes. Was there kind of an asterisk tied to it? Also, yes, and that is the ethics amendments that might be coming down the line here. So, again, back from our article from Galaxy, Democrats, led by Senators Gallegos, who did vote for it, by the way, and Kirsten Gillibrand, have been explicit that the bill cannot pass without ethics provisions. The White House's public position is that it will accept across the board ethics rules, but reject anything targeting specific office holders. Leadership on the banking committee believes that the committee's jurisdiction over issues or ethics issues is limited, so this question may be deferred to the floor or to a separate vehicle entirely. We expect the ethics amendment to be offered in committee by Democrats, notwithstanding the jurisdictional question, both to put the issue on the record and to test Republican appetite for any compromised language ahead of the floor. So I'm actually the more I've been looking into the whole ethics thing, do I think it's all just political theater? Yes. But I'm actually kind of relieved to see that there are other people kind of on both sides of the aisle that are getting back to the old, very technical, do we have jurisdiction over this, as opposed to just trying to reach out and grab power whenever possible. So I appreciate that. But at the same time, yeah, obviously the president has been largely involved in crypto stuff going on. For God's sakes, the man had a meme coin in his image that did perform very well, made a lot of people a lot of money, and then did the classic meme coin thing and petered out. I will say props to World Liberty Finance, because they've actually still been using the token to invite people to specific dinners and stuff. So the token actually has a use beyond a meme coin, which is, I never thought I'd say that, but here we are. So it's pretty cool. But yeah, obviously, I think that the Democratic side of the aisle is really targeting the president on this one and his family specifically. So across the board ethics, yeah, that's a good thing. But if you're just applying ethics to individual people while not making rules for everyone, that's stupid in my opinion. So
well, it's the same thing, man. Like you said, like what's the difference between this and stocks?
Nothing.
I mean, there's a reason why. Who's the goat when it comes to investing?
Nancy
Speaker of the
Pelosi.
House. Speaker of the House, Nancy Pelosi. She's outperformed for decades. I mean, if that's not insider trading, I mean, what else is there? So to sit there and say that, you can't own stocks and stuff. I mean, I'd like a blanketed statement. Honestly, I don't think anybody who's in any type of power that can benefit financially from this should be able to benefit anything, because then you that's where briberies. That's why DC is so corrupt as it is now, because everybody could be bribed or essentially forced to take a bribe, whether they like it or not. I mean, that's the root of the problem, is you're not making decisions best on what's the best outcome for U.S. citizens, because there's all these other, personal dilemmas that are going on behind closed doors. They need to,
revenge,
so if it's
vendetta,
yeah, but I mean, you have crypto here. Okay, fine, let's go ahead and get stocks out of this. Get it, real estate, anything. It's almost like until you ban, you can't own anything, but we're going to give you a nice pension plan, we're going to take care of you until you get to that extreme where you can't benefit from anything directly, family members or anybody, and really lock it down. Then you're always going to have corruption, and I don't see how this is any different. Owning stocks, owning crypto, it's the same outcome. Like you just said, I don't think they should be targeting, like specifically they were saying Democrats wanted rules preventing the president, vice president, and Congress from owning or promoting crypto projects. Okay, well, why stop there? I mean, like, why stop? If anybody's in power, or anybody who's in office, you know, holder, that they need to basically have the same rules applied against them across the board. If you really want to fix it, let's fix it. But hopefully that they'll take that out, and that's not going to be a blocker. Because I can tell you right now, if they do put that in there like that, I guarantee Trump's not going to sign it. So then it's going to be stalled out again.
Brilliant. Yeah. I see this kind of go in two ways. One is that this either can or cannot or will not be used as a political football in the upcoming political season of the summer, whatever you want to call it. I think that right now there's a lot bigger issues that both parties are really trying to deal with. Number one, I think, is the redistricting efforts that are going on right now. That is the thing that people have the most up in arms about. And I think crypto is largely not it's not even orders of magnitude in the same conversation as that. And because of that, I think that this could have the opportunity to kind of just keep on going by. But at the same time, the other side of the coin is if it's not that important, then why pay attention to it and actually get it going when there's other things you could be doing? So at large, just put in just kind of like the blanket, hey, don't do the unethical stuff. It's stupid that they would apply it to this and not the entire stock trading thing, but you got to take your wins where you can get them, because at the end of the day, the win for this is getting this legislation signed into law, because this is long-standing structural rules for the overall crypto industry inside of the United States. That it has been and will remain the biggest thing that I'm really pushing for with this one, is that this is solidification of the current environment for crypto. We finally have a favorable crypto environment, and this is the opportunity to really solidify that, as opposed to go back to it's at the whim of whoever is in charge of the SEC or the CFTC. Although if they don't get this signed, realistically, the SEC is probably going to try to grab it as much as they can again. So I think this is lower on the priority list politically, but at the same time, that could be a boon. It could be a bane. You never know. So I don't know. I'm hopeful. I'd put it at better odds than Polymarket, to be honest. Maybe I should get it on there or something.
Right.
Yeah, just saying. Alrighty, well, we beat that one up pretty good. Lord knows we probably spent 20 hours on air talking about this since January, but here we are. Alrighty, we got your what feels like your weekly security update or notification of, hey, things can get hacked and they will get hacked. So looking into Bitcoin news.bitcoin.com. Crypto Bridge exploits hit $328.6 million in May as we were tracking the 8 major incidents. Cross-chain bridges, infrastructure that allows assets to move between separate blockchain networks, now have lost over $300 million to attackers across 8 separate incidents in May of 2026. Well, let's go down here and see what we're looking at. Okay. Varus Coin, Varus Ethereum Bridge, 11 million. Thorchain, 10 million. Zeta Chain, 300,000. Kelp DAO / Layer Zero, $292 million, baby. Okay, let's dive in on that one. We now have the largest DeFi hack of 2026. Kelp DAO lost $293 million and now tops the list. The latest and most devastating incident occurred on Sunday, April 19th. Gosh, it's a little bit old. I think we had another one, actually, I was looking at. But I believe this is still the largest for the year. Latest and most devastating attack drained roughly over $290 million, making it the largest DeFi exploit of 2026. What happened? Well, it operates as a liquid restaking protocol. In simple terms, you deposit established cryptocurrencies like Ethereum, or the staked versions, which is the ST-ETH. So if you see that, it's staked Ethereum, into Kelp. In return, they receive a receipt token called that, which earns rewards and can be used in other financial applications. To allow this to function across more than 20 different blockchain networks, it uses a bridge. The bridge holds a massive reserve to back the tokens circulating in the networks. Well, on Sunday, the attacker targeted communication system connecting these blockchains known as a layer 0. A layer 1 is the base native network for a blockchain. A layer 0 is something that connects them between each other. And the tools to do that are called bridges. By funding a wallet through Tornado Cash, can't stay out of trouble, can you? A privacy tool often used by hackers to hide their tracks. About 10 hours prior, the attacker successfully tricked the Layer 0 endpoint contract into believing a legitimate instruction had arrived from another network. The fake message prompted the bridge to release over 100,000 staked Ethereum directly to the attacker. The stolen amount represents approximately 18% of the entire circulating supply, which totals around 630,000 tokens. Yeah, bridges continue to be the single weak point in all this stuff going on, and well, they did it again. Oof.
17 to 20 billion total in hacks all time for crypto, by the way. I mean, it's been a lot.
Yeah, well, hear me out. 17 billion out of a market cap that approached 3.5 trillion previously.
Mm-hmm.
It's not small, but at the same time, it's not like it's the overwhelming majority or anything. So again, when it comes to the bridges, they continue to be the most vulnerable point. And the reason being, it is the most complicated and tricky thing to get right. It's easy, or I was going to say it's easy, but it's easier to operate a blockchain that does not talk to other blockchains because everything stays on your own internal ledger and your internal system is very cohesive and kind of sectioned off from everything. That is not what DeFi is hoping to aim for. DeFi is hoping to have nomadic financial freedom across multiple networks. And in order to do that, you have to connect the networks and get them to play nice with each other where they don't operate off the same infrastructure or code even. And because of that, that is where you get this kind of stuff. We have been seeing, I'd argue we've seen less of it as we've gotten better at this kind of technology. But at the same time, it continues to show that the bridges are really the crux of it. So for the time being, I think centralized exchanges are going to try to claim that they are better than this, but honestly, they have their own risks as well. And it's just another reminder that there is risk involved in this stuff, no matter where you go. This is a pioneering technology. It is still relatively young at the ripe age of 16 years, effectively. But you still got to be vigilant. And you got to watch out and make sure that you don't get caught up in this kind of stuff. So yeah, bridges, beware. Beware, beware, beware. What do you think?
Well, I think there's landmines everywhere in crypto, and I think we haven't had a lot of hacks lately because that's one good thing about the prices being suppressed, that you typically have hacks, they seem to go down less but when we start hitting, all-time highs again and all, or things start to heat back up, you're going to see more and more hacks. That's typically when you see the hacks really increase, and they're just getting too easy to exploit for a lot of these guys. Like, if you stay on Essential Exchange, you're hostage to everything internal on Essential Exchange. But if you're in DeFi, you've got to take proper precautions on your side. And there's a simple steps. Always have a hardware wallet, because if you've got that alone, that's going to help you a lot. And the other big factor, do not click on any links or anything unless you're certain that that is the proper link. And then the other is, you should have a dedicated laptop or PC that is dedicated strictly for just crypto. If you're doing it that way, those things alone will probably shut down on mostly everything that's going on out there. Those are typically where people make the mistake. They click on a link they're not sure about. Even people who've been doing this a long time, they make the mistake. They don't think it through. They click on it and they don't realize and then it's too late. Once you click it, you're done. The wallets with your hardware wallets and revoking token and revoking the signatures, don't have an open-ended signature. There's tons of things you can go through. I mean, we talk about it. I mean, we can go through this list. There's a whole bunch of stuff you can take actions on. And members or anybody who's in our chat, we'd be more happy to walk you through all those. If you need help with anything like that, walk you through that and show you all the stuff that you need to do, and not just give you a list of what it is, but to show you how to do it. I mean, there's tons of stuff out there how to do it properly, but you got to know what to look for. And then the other thing, you got to know, like, where you're going to get your information. Is that a hack in its own? Are they telling you to go here? And there's landmines everywhere in crypto. That's the big problem.
It's true. To give you the TLDR of just the quick and dirty of what you just said there, which is that, all right, here's your DeFi rules for dummy. Number 1, your seed phrase. That is the thing that gives you cryptographic password to your wallet. Those words are between you and God. No one else should ever know those, because that is the ultimate key to the kingdom. Number 2, what does the hardware wallet do? Well, it actually incorporates another set or layer of protection, this time in the physical space that we occupy instead of the digital side. So If someone does get access to your wallet, but they don't have what is effectively the digital handshake that is formed by you plugging in your hardware wallet, it cannot actually finish whatever it's trying to do inside of the wallet. Number 3, gosh, we had seed phrase, hardware wallet, know the program you're accessing, and understand the transaction.
The link. We have the link.
Yeah. Believe me, I am not a coder. I don't think most of you guys are. So trying to read the actual code about what's going on in the transactions is very hard to do. At the same time, you can get a surface level understanding of what exactly is going on based on the thing you're trying to do. Understand the action you're trying to perform, whether it's a swap, a stake, a send, whatever it is. If the words you're seeing to describe the transaction are not matching up to what you're trying to do, odds are that's not the right transaction. And then number 3, if you can try to have a separate machine for crypto, what that does is it's another layer of insulation to prevent a little more of the old school techniques, talking about like Trojan horses and spyware and stuff like that, that's trying to capture data or gain access to the device that you are using. If you are walled off on a different device, you are creating another little layer of insulation so that programs you would maybe normally use, or if you're looking at some like new weird stuff out there, you're trying to find anime on the pirate websites, it's not trying to download something that's going to put a keylogger or try to put a device that's going to drain a wallet. It's just another barrier of just separation, and that's pretty much the basics right there. Alrighty. Tell you what, we got one final thing I want to get to. This one is, I know it's my personal choice here, but I did find it interesting and slightly funny at the same time, so I want to bring it up. Coming to us from the street, Goldman Sachs is dumping Solana and XRP for a surprising new investment. Well, let's see what they're doing. Wall Street's biggest crypto bets are starting to look very different from just a few months ago. After aggressively expanding into ETFs in 2025, Goldman Sachs now sharply reverses course, exiting some of its highest profile position. What are we looking at here? Well, they fully exited their XRP and Solana linked ETF holdings during the first quarter of 2026, according to bank's latest Form 13F filing with the good old SEC. The move marked a major reversal from the bank's positioning just months earlier. At the end of Q4 2025, they had $154 million worth of XRP ETFs. And then also, we don't get the number on the other ones. But coming down here, they're pivoting. What are they pivoting to? Hyperliquid. After they exited the XRP and Solana ETF products, the bank simultaneously opened a new position tied to Hyperliquid-related infrastructure. Hyperliquid has quickly emerged as one of the fastest growing sectors in crypto markets. It is a decentralized perpetual futures trading platform that allows users to trade crypto derivatives directly on-chain without traditional intermediaries. The platform processed roughly $2.9 trillion in trading volume during 2025, a more than 400% increase from the previous year. And fun fact, I believe Hyperliquid currently is actually having a pretty good last 2 quarters and currently sits as our number 10 largest cryptocurrency by overall market cap. So I guess XRP and Solana out, Hyperliquid is in. What are your thoughts on this one?
Yeah, there's a little bit more.
Crystal ball. What are they trying to do here?
Well, there's a little bit more in here into this category.
Okay.
So they dumped XRP and they dumped Solana, but they actually bought Hyperliquid Strategies Company, which is a publicly traded company, tickers PURR, and they hold a large amount of the Hyper tokens. And that was a small position they bought. They got 654,630 shares of Pure. So interesting enough, though. But if you look at the Pure, it's rallied very hard. I mean, since the beginning of March, it's done a 2x just in the stock itself. So this is a very big move, and this has only been around for a short period of time. This came out, and let me see here, December 1st, I think is when it first came out. Yeah, December 1st is what it looks like, as I'm seeing.
2024 we're looking at.
What was that?
December 1st, 2024 for Hyperliquid?
No, no, I'm seeing 2025. Is it?
You're talking about a different stock ticker, aren't you?
PURR.
Not pure like the word.
No, PURR is the ticker, and it came out in December, and it was trading around $4 when it first came out, and now it's up to $8. So That's been a pretty big move. That's what they rotated in. All I can think is that maybe they want to own more stocks and more companies, infrastructure companies, instead of the actual underlying crypto itself. It says that they're shifting away from direct altcoin ETF exposure and towards infrastructure and ecosystem plays. So yeah, they're looking at buying up more of the infrastructure around crypto is what they're looking at, which would be, that's what this is kind of come into play. So that's what they're switching their positions to. So I guess companies that build infrastructure around crypto as far as what their exposures are. So this would be this. Obviously, we already know about BitMine and some of the other ones, which are more treasury holdings. And so those are another plays of owning actual just, infrastructure. I'd be like also saying, hey, I want to buy a Circle and companies like that are more infrastructure in that case. And Circle obviously owns USDT. I mean, USDC.
Am I surprised that a large TradFi company that got into crypto is now putting more money into a futures trading platform that deals with derivatives and intermediaries?
Sure.
I am not surprised for a second, because that is kind of their bread and butter. More tools available to the professionals. That is what they like the most. And well, taking money out of the spot crypto and investing in the platform that's going to allow you to do the perpetual futures trading. That sounds like exactly the kind of play that makes sense for these guys. Not surprised at all.
It'll be interesting to see this one. Definitely want to keep on the radar, see how this thing tries to perform over with some of the other stocks that are out there in the infrastructure.
Yeah. Look, this is actually a bit of a callback to one of the episodes we did probably about a month ago at this point. But there were other platforms that were looking to expand into futures trading for more and more crypto. So I'm not saying that the first, probably not won't be the last. That is what I am saying. True. Alrighty. Any final thoughts on that story, good sir?
No, just I'm I'm looking just at this. It looks like it's definitely in an uptrend. There's no doubt about that for that stock. I mean, if you're so inclined to look at it, it's got a really nice channel, that's for sure. So if you were going to trade this or try to get into it, you'd wait for it to get back to the bottom of the channel to take a fly. To me, it's gotten overextended, so you could see a pullback here, but it's because you had that big volume that probably coming off of this story here itself. So you could see a pullback, pullback sometime around that $6 range if you were so inclined to get into it. But I'd rather own the actual assets than play around with these stocks. Yeah, keep in mind too, all these stocks are also feeding off the overall indices with the NASDAQ and all these other S&P 500. They're all ripping it because there's just a big pump in those overall markets, so they've been lifted that way too. So keep that in mind as well. But yeah,
true.
That's all I gotta say about that.
Fair enough. We will be keeping an eye on this stuff and everything else we talked about here tonight, namely crypto prices and basics and fundamentals of security as well. It's kind of what we do around here. And by the way, if you want to get more of that, you guys can hop into our private Telegram by going over to walktheblockndf.com. That is where you can find the membership tab. You can join in there. And once you're inside of there, you'll get access to the ongoing chat where we post all of our latest and greatest research, news, and the conversations we have with you guys, along with full access to the entire video archive of all the past streams and videos that we've done, covering everything from basics, fundamentals, security, market updates, price action, news, and also deep dives into specific tokens, projects, whatever it is. So that is where you can find all the latest and greatest there. walktheblockndf.com. As we like to say around here, the waters get rough, so don't sail through them alone. Come join us as we navigate digital finance together. Private mentorship, exclusive live streams, Q&A. Go from beginner to intermediate to expert with us. So when we all work together, we can all win together. Alrighty, good sir. That is all that we have for this evening. Any final thoughts that we could add here? Market action ideas, Clarity Act actually getting passed or not?
No, it's not going to. The Clarity Act's not going to get passed. Right? Just keep your eyes open for some of those major players that we pointed out that are going to be tipping their hat or they're tipping their hand, I should say, on what they may be, leaning toward if they be more pro crypto. So those swing votes are more or less what you're looking for. Because what we didn't talk about is when it does go to the floor and they have to do the vote, you're going to need 60 votes to be able to bypass the filibustering. Yeah, you got to get through that, because if not, they're going to filibuster and they're going to stall it. So they got to get at least 60 votes. So I'm pretty sure you're going to see a lot of back end deals going on to try to grease the tracks, try to make sure they got those votes before they take it to the floor. So any type of stalling there, that's not going to be a good sign if they keep pushing it back. So that's probably the biggest thing. As far as the crypto markets, personally, me on Ethereum, like I said, I already started nibbling back in on my positions. I took some positions earlier in the mid-April, and I'm just redeploying those back in those areas. I'm still heavily, in Ethereum and other crypto as well. I'm still, more happy to hold for a very, very long time. I've got conviction. I'm not worried about this, but I do have a tradable position of my portfolio that I've been going in and out of just on these swings. When you get these opportunities to buy back in, a little protection to the downside, so forth. That's what I'm looking for. So hopefully you can see maybe Ethereum or Bitcoin will try to bounce and get back up to that high point of the channel. That would be nice, because that would make all those bearish people and KOLs really start to sweat some more to try to come up with ideas. It's funny how quiet they all get when it's going up, but when it starts to go down, they all start to come out and start talking. It's pretty funny. It's pretty funny.
It's never a boring day over here, I'll tell you that much.
And I hear the comment here that banks will gut crypto. I would say that TradFi is going to make sure, and when I say TradFi, I'm including the banks in here. They're going to make sure that they're going to get position.
They want their piece.
Yeah, they're going to want their piece, and they're going to want to position it to, regardless what happens, what transpires from this whole thing, they're going to win either way how this is going to do it. And there's been so much legwork that the banks and others have already been building that make up mainly Wall Street. So I don't expect them to try to kill crypto, but they're going to make sure they get the most position, and they're going to try to make sure that they can control most of this. And then they're going to reap the rewards when it does start to benefit them as far as being more profitable. So they're building their positions now. That's what they're doing. And they're buying up all the bags that people are dumping. They're more than happy to buy them up at these prices. So that's what I'm looking at it. That is.
That's fair. I think it's pretty accurate. Yeah. They're in at this point. They're not getting out. I disagree with Senator Elizabeth Warren. I don't think the Clarity Act is going to be a killer for the economy or the U.S. petrodollar worldwide. No, this is kind of, look, you could have seen this coming for the last 12 years effectively. And, well, now we're actually just finally getting some rules about it, which is what people have been complaining about for a long time, including some of the senators aforementioned there. So I view it as a good thing. I think it has a very good chance of passing. But yeah, the same time for the crypto markets. As far as the Bitcoin price, I think that's really the one to watch right now. Short term, we have an interesting window here for the end of the 60-day cycles. As far as the altcoins, shout out to the guys in the Telegram we were talking earlier today. There are a few things that are performing very well. I would argue there's a good chunk of other things that are positioned very well to perform well. But the overall market right now is going to be dictated by what happens going forward in the next 3 months effectively, because if this rally continues towards the upside, I think it definitely starts to not look great for 4-year cycle folks and the overall macro business cycle kind of thing. It looks like it might be taken over, but if that's not the case, and we are sticking to 4-year cycle, bad news for all coins. They're probably just going sideways or downwards for at least a year. So we'll see. But outside of that, folks, catch us in the Telegram. That is where we're going to be hanging out, answering all the questions from you, the people, and our great, fantastic community. With that being said, though, thank you again for tuning in on the special Wednesday night episode of the Thursday night stream. We will be back next week on Thursday night at the regularly scheduled time, 9 p.m. Eastern, as always here. But until then, I hope you guys have an excellent week. Have a happy Memorial Day. Have an excellent day off on Monday. Like that one a lot. But
yes, happy Memorial Day. Absolutely on that one. Double that.
True. Outside of that, ladies and gentlemen, thank you so much for tuning in. We'll catch you guys next time, and we'll catch all you guys in the Telegram as well. Until then, good night. Have a great weekend. Bye-bye.